Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar, and with me, as always, is my co-anchor, Pavitra Parekh. So, Pavitra, what a stupendous rise that we have seen in the markets. In fact, after we saw Nifty, SGX Nifty and the kind of opening, we thought that maybe China factor is weighing heavy on the market, but it has defied all the factors. Of course, China factor is probably easing as well, and that probably is also adding to the strength of the market. So take a look at Nifty 50 at the moment, surging ahead with almost 100 points gain and over 0.5% gain at the moment. Bank Nifty is the one which is an underperformer compared to the key indices. So 0.35% up on the financials, the big blue chips from the banking side, and the mid caps hugely underperforming, deep in the red, 0.33% down and looking comfortable in the red in the weaker zone then. But advanced decline ratio, because of a lot of participation otherwise also, and markets looking more or less having a strength, advances are higher than the declines at the moment. On my screen, some of the consumption stocks like Hindustan Unilever as well as Nestle are the top gainers in terms of percentage when we talk about Nifty 50, and the metal pack is also shining in trade. Tata Steel, Hindalco, JSW Steel all looking good, along with some of the big banks, and Reliance Industries, which has been contributing a lot, is doing so today as well. Pavitra.
Hi Nisha, good afternoon. So like you said, it is another day of record highs for our markets, holding completely steady. It is the mid-cap space where you're seeing that underperformance come through, but the rest of the market, there's just no stopping it right now. Like Nisha pointed out, some of the consumption names she already mentioned, but also take a look at something like Dabur, which is doing very well, Marico, which is doing very well in trade. In terms of cues to track, we are watching this entire China situation. There's also been a lot of property reforms which were, announced, and on the back of that, you have the Chinese markets, Hong Kong markets, which are trading with good gains today. So watch all of that. And then you have the Fed Chair Powell who's going to speak on Wednesday. So that is important for the markets to track. That is what we're going to be focusing on from a market standpoint. But let's kickstart the show now by focusing on the latest that came through from China.
All right. So that was about FTX collapse and BlockFi collateral damage then. But remember that the spate of bad news from the cryptocurrency space is not stopping anytime soon. So staying with that particular crypto contagion, well, Bitfront, a US crypto exchange backed by the Japanese social media firm Line, said that it has suspended new sign-ups, credit card payments as of November 28th and will cease operations in a few months. Now, the California-based company said in a statement, and I quote, that despite our efforts, we have regretfully determined that we need to shut down Bitfront in order to continue growing the Line blockchain ecosystem and linked token economy. Now, the company in its statement also clarified that the decision is unrelated to the recent news from the industry around misconduct.
All right, that is everything that we are tracking on what's going on in the crypto universe. But with that, it's time for a short break now. When we come back, we're going to bring you excerpts from our very interesting conversation with Sudhir Sitapati, the MD and CEO of Godrej Consumer Products, on the volume and raw material price trends that the company is currently seeing. Stay tuned. Welcome back. You're still tuned into Business Lunch on CNBC TV18, and we have been telling you that the entire consumption pack is really buzzing around today. So let's talk about a few of those stocks. Nestle PLC, the parent of Nestle's India arm, has raised its revenue growth guidance once again. So Mangalam is here to tell us more about that. Mangalam.
Well, it seems like the world is going to consume a lot more, and that's the word coming in from the Nestle parent, global parent, Nestle PLC itself. They've raised their revenue guidance for this year in quick succession. In fact, at the end of the third quarter results itself, they had raised it to 8%, and now they've upped that range from 8 to 8.5 odd percent. But remember, this is for global Nestle sales. For India itself, it is understandable that their sales are going to outdo, because the first 9 months of this year itself, the Nestle company, the Nestle management follows the calendar year. So for the first 9 months of this year itself, they've managed to do about 15% in terms of revenue growth in the domestic business. And importantly, the global parent has been saying that India's growth will be outsized. But as a whole, for the Nestle, Indian business accounts for sub 5% of sales and profitability. So the fact that they've raised their overall growth guidance for the company may not necessarily mean that India will outperform any more than it is doing right now. And as a result, the stock which is doing well, it's a function of all the other FMCG stocks doing well today, and not particularly because of this comment. In terms of valuation, Nestle is the most expensive in the consumer pack, with upwards of 60-62 times 1 year forward earnings. So let's see where it goes from here. But for now, this is positive news from a global standpoint.
All right, positive news coming in, and Nestle is also, along with some of the other consumption companies, a gainer today. But let's stay with consumption and talk about the FMCG sector. And my colleague Shilpa Ranipeta got in touch with Sudhir Setapati, who's the MD and CEO of Godrej Consumer Products, and began by asking him about the trends in the raw material prices, which, remember, were earlier higher, have now been coming down and normalizing, and whether the benefits from the lower prices will be passed on to the consumers. Listen in.
Most commodities, which is palm oil and crude oil, have come back to normative levels, and we will price accordingly. When we did the pricing, when there was a rapid increase in commodity costs, we didn't pass on the prices to consumers, and we will do what is right for consumers. But it is certainly not an unusual situation right now in terms of commodity.
Okay, and with respect to volumes also improving, most companies have been talking about an improvement in the second half. I wanted to understand, now that we're into November, or almost the end of November, what's the picking up? Are you seeing volumes picking up in this quarter? What's the consumer demand like?
No, I think, look, volumes are a function of many things: hyperinflation, COVID bases. Things will stabilize and go back to normal levels in the next few quarters. Having said that, consumption in India is under stress and under pressure. There's no question about it. So, I mean, that on a longer term basis, that is difficult right now.
But is it still on a decline, or are you seeing a pickup? I mean, last quarter was a decline. This quarter, are we expecting another decline or single digit?
I mean, you have to separate three separate issues here. One is optics, which will change. Two is hyperinflation-led short-term volume losses. That happens when there's hyperinflation.
Right.
That will also change. And three is volume pressure, because consumers in India are facing post-COVID issues. That may take a little bit longer to change.
A sense on your Indonesia business also, a lot of pain we saw last quarter there. Any improvement, any signs of picking up that you're seeing? What's the trajectory in terms of growth and inflation?
Excellent article by The Economist, which speaks about why Indonesia is such a great country to invest in, and why it's got a lot of future growth prospects. So we remain very bullish about that.
All right, that is the Godrej Consumer Management saying that while consumption is under stress in India, he does see things returning to normal in a couple of quarters. But with that, let's get you the latest on the Jet Airways case. Sources are telling us that lenders to Jet have filed a response in the NCLT over the Jalan-Kalra Consortium's claim of having met all conditions for the takeover. So the lenders, in their response, have sought that the consortium's application be dismissed by the NCLT for being misleading, citing grave harm to stakeholders in the case of relief sought by the consortium, in case this relief was granted. Lenders have also alleged that the consortium has sought to take control of the airline and avoid its obligations under the resolution plan, and that it had falsely said that it had met conditions for, the takeover of the airline. So that is an important piece of news that we're picking up on Jet.
Oh, yes, it's a spot of bother also. And I now remember the Kingfisher, whole saga.
Story, yeah.
And it was just not saved. So, Jet is on top of our agenda in terms of the developments on resolution. And meanwhile, on that front, the Jet Airways Cabin Crew Association has also moved the NCLT seeking liquidation of Jet Airways assets after the consortium defaulted on the payments committed in the resolution plan. In fact, our colleague Madiha is right here to tell us why this is an important development. Tell us, Madiha.
Well, Nisha, this is the first time that any stakeholder or creditor that is part of Jet Airways' resolution process has asked for liquidation of assets to get their dues. The Jet Airways Cabin Crew Association represents 700 cabin crew who had also sent a notice to the consortium last week asking it to make payments in 4 days. The association has also told NCLT that the consortium has missed both the payment deadlines, considering 20th May as the effective date of the resolution plan. First was 11th November to pay 52 crore rupees to workmen and employees. Second was 16th November to pay 185 crore rupees to lenders. The Cabin Crew Association has told the court that the value of majority of assets of Jet Airways has exponentially depreciated. They say any further delay in liquidation will lead to further depreciation of these assets. The Cabin Crew Association has further elaborated on why they are seeking liquidation. They say that airport charges are included in the cost of corporate insolvency resolution process. And since these charges are mounting, a delayed liquidation will be a loss for other creditors, including workmen and employees.
All right, Madhya, thanks a lot for getting us all of those details on Jet. But with that, it is time for a short break now. You don't go anywhere. We're tracking lots more news and market action.
Welcome back. You're watching Business Lunch, and a quick look at the markets. Well, stable with 100 points gain on Nifty 50. So really going strong, 0.55% up in trade. And Bank Nifty, though underperforming, is quite well sorted with gains of 0.35%, and mid-cap is an underperformer. Tata Consumer has also joined the bandwagon of some of the gainers coming in from the consumer space. Now let's talk about something interesting which created a lot of flutter yesterday and became a big hot topic point of discussion there, Pavitra. And, systematic investment plans and people putting money in SIPs, and the flurry of that is coming in the market is something which is giving Merc and other luxury cars a run for the money. In fact, Mercedes head of sales as well as marketing, Santosh Iyer, had stated because money is going into SIPs, luxury car sales have dipped. So how much of that is true, or is it more notional and more of a trend saying that people are investing in prudent personal finance, aspects instead of depreciating assets like probably something as expensive as a luxury car, and rather invest for returns? So Pavitra, what do the numbers tell you? Is that really an impact, or is it just a trend of notional shift that he was hinting at?
Well, that attention-popping sort of article that you pointed at, it definitely is one that will, grab headlines. I'm sure everyone has seen that article, which is now viral, saying that SIPs are eating into luxury car sales. It doesn't quite paint the real picture. But what is true, however, is that SIP investments have been consistently moving higher. So we decided to do a deep dive and bring you some really interesting data on what the SIP flows have been like. Currently, by the way, the number of SIP accounts in India are at 5.93 crores. That's a huge figure, right? That is the total number of figures that we have in India. Of this, if you see, the new SIPs have also been trending higher. So that chart will come up for you, and you can see that the last figure we have for October, we have 19.73 lakh new accounts in the month of October. That has also been consistently going up. Of course, September saw an outsized amount, but it has been quite steady. Now, a figure that we have mentioned to you time and time again is the inflows into this category. So the last figure for October has come in, and we've crossed that 13,000 marks. That is a huge figure into into the SIP category. I'm going to throw another big figure at you, and this is the total SIP AUM that has gone up, like you can see on your screen. In June, it was at 5.5 lakh crores, and now if you see in October, that is the last figure that we have, it is at 6.6 lakh crores. Now, while these are all big figures, let me take you through what the average ticket size looks at. It's at just around 2,300 to 2,500 rupees. That is what the average ticket size is for SIPs. So, claims that they're taking away from Merc sales is perhaps a bit of a stretch. Remember, while flows have been picking up, new accounts have also been going up, the average ticket size has been pretty steady. So it's not like the average ticket size has also been increasing. Now I'm going to get on to the fun part, okay? Take a look at how the SIP returns have been for a Nifty index fund for the purpose of this research, and this is research that we're, attributing to FinFix. We looked at the UTI Nifty 50 SIP fund, and this is direct returns that will come up on your screen. So just see, you have everything from around 17,000 to 17% to 21%. Those are the kind of returns that you have seen for the index. Now let me compare it to the kind of returns that you have seen just on the index. So on the Nifty index fund, if you would have done an SIP versus on the Nifty, that figure will come up for you. So that is for this year. The returns on the SIP would be 18.36 versus on the Nifty, it's not even 6%. So that is the kind of outperformance that you have seen if you would have invested in an SIP. So that is some big, that is a big difference. And Nisha, perhaps, what this means is that if you would have invested in an SIP, you would perhaps be closer to your Mercedes goal.
Actually, that's a very good point there. And I would just say that it's a good shift and a trend towards more prudent personal finance for returns rather than depreciating assets is what it really meant. With that, it's completely out of time on Business Lunch. Thanks so much for tuning in.